3, 2, 1, 0. Ignition. Liftoff.
Hi, everybody, and welcome to Moontower HQ. My name is Nick.
And my name is Yuri. Thanks for joining us again.
On this episode, we look at how institutional participation in Bitcoin is growing and what trends are likely to come about as a result. Now, the big news this week is MicroStrategy purchasing $250 million worth of Bitcoins. MicroStrategy itself is a NASDAQ-listed business intelligence company worth about $1.2 billion, which states that it has formally adopted Bitcoin as its primary reserve asset by purchasing 21,454 Bitcoin just recently. This news hints of larger trends in modern business and is actually not just a bullish sign for Bitcoin in general. First and foremost, one of the big trends that has been happening recently is the race to cash. Yuri, on our previous episode, you talked about how companies nowadays are hoarding more and more cash. Can you please quickly refresh our viewers onto that concept and why you believe it's happening in the first place?
Yes, thank you. The companies hold cash these days because I think they are not really sure about the future of the financial market, and this is what we're seeing these days. If you look at the numbers, then they don't always make sense. When the Fed prints a lot of money, the European Union is printing a lot of money. And this has to do with the situation with the coronavirus pandemic. So a lot of people are losing jobs, a lot of businesses are shutting down. But at the same time, when you look at the stock markets, those figures are going up. So we used to measure a healthy economy by how the stock market performs. So by all means, we can say that the economy right now is not healthy because of the lockdowns that have been happening globally. However, when we look at the stock market numbers, they're going up. So there's something wrong there, and I think that makes a lot of companies uneasy in this environment. So they just decide to hold cash in their reserves and not really invest it into anything because right now they cannot see a clear path. Of course, some of them have some information probably pertaining this and that interesting investment opportunity, but the majority are just sitting ducks, I would say, and waiting for the economy to get back to normal. Whether it will or will not get back to normal, we don't know, because there is a lot of talk about the new normal, and no one knows what it means. So we'll just have to see.
And this race to cash, as a result of trying to hedge against the potential collapse of the US dollar, is a mandate, first and foremost, that has been put forward by the shareholders of those companies, wherein the cash reserves have to be protected against any type of future monetary action by the local government or world politics and geopolitics and economics, macroeconomics for that matter. In particular, what is important to understand as well is the aspect of treasury management. And treasury management is essentially being able to fulfill those duties to the shareholders of the corporation to make sure that there is enough assets available on the balance sheet for future expansion, acquisition, and general operations. Now, generally, the way that companies do this in the past is they bought up government debt or government bonds. But the bond market right now is going through the same repurchasing program, similarly, Yuri, to what you mentioned with corporations buying out their own stock, only with the government purchasing large amounts of bonds on the open market to continue to maintain the price. So as a result, companies are more reluctant to buy this asset class as a means of long-term de-risking of their treasury. And what MicroStrategy has done, which I believe is something that you and I are both used to in our day-to-day, but for a company coming from the legacy space is very interesting, and that is they are actually buying Bitcoin, again, for the purpose of having it be a reserve asset on their balance sheet. So they themselves actually came out and said that their reason for purchase is because they fear that the current economic conditions will cause instability in the US dollar and other fiat currencies that they may be holding. So this purchase was a means to stabilize and to hedge against that. Another aspect of this particular piece, which is also relevant, is the fact that MicroStrategy and its ownership structure consists of two very large hedge funds, which have over billions of dollars in assets under management, or AUM, as it's called. One of those is BlackRock, and the other one is Vanguard. I believe combined they have almost a 27% stake in the company in general. But what this implies is that the general institutional investors in the legacy space are very much interested in exposure to Bitcoin. This exposure to Bitcoin, however, is not the same as you and I when we would go and we would purchase a Bitcoin out on the open market. It is what is known as indirect exposure. So to define those two terms, indirect versus direct exposure, one can look at the futures market, for example. In Bitcoin, there are cash settled futures, and then there are asset or Bitcoin settled futures. Cash settled futures means that at the end of the expiry of the futures contract, the user will actually be paid in cash, even though that the underlying asset that is being valued is a Bitcoin. This is particular with the CME. However, with things such as backed, what you have is a futures contract that's actually denominated in Bitcoin itself. And when it settles at the end of its expiry period, it actually pays you out back in Bitcoin. So this is known as direct exposure. And because these big hedge funds own ownership in this company that owns Bitcoin, technically we can consider their investment indirect. Yuri, would you be able to tell the users why you think it's important to have direct custody over your own funds, and how we have in general approached the topic of treasury management internally amongst ourselves?
Is actually value prop to study Bitcoin yourself in your. It is that when you delegate custody to a third-party institution, for example, you have what's called IOUs, essentially receipts on Bitcoin, but not Bitcoin itself. For example, if you store your Bitcoin on an exchange, then what you have is an IOU. You have an entry in the database that the exchange manages. Yes, they do have access to Bitcoins. It's a centralized wallet that they control and where all the Bitcoins from all the clients are stored. However, if something happens to that centralized wallet, you will not be able to get your Bitcoins back because they were not yours in the first place, because you simply delegated custody of Bitcoins to the institution. Similarly, how you store your cash in a bank, for example, the bank can deny you your money. And we have seen cases of that many, many times. So that's why Bitcoin is called a peer-to-peer electronic cash. Cash because you actually have control over it and no one can censor your transactions. No one can deny you access to your own Bitcoins. You can pass it around as you please. So I think this is a very important distinction because this is what gives power to the people over their own money. You can literally become your own bank. But as we know, with great power comes great responsibility. So you have to take some precautionary measures and preventive measures in order not to lose your Bitcoins or in order not to become a victim of a hack or a scam. So obviously there is some learning curve involved, but as is with everything new. However, I must say that it is not much more difficult than learning how to use a computer for the first time. It's just a skill that you acquire once, and then like learning riding a bicycle, you just keep it with you forever. You understand the basics of it. It's not much it's not much difficult. It's literally right. It concerns writing down some words like passphrases and then just learning how to recover your Bitcoin if your hardware, for example, fails. So with that in mind, I personally and in our projects like Moontower, for example, we always encourage users to keep their Bitcoins themselves, and we even engage in consulting and educational procedures to explain to users that it's not that difficult to store Bitcoins yourself. And when you have full custody, you will feel truly empowered, and you will feel that there is no one to ask for permission to use your Bitcoin.
And the concept of custody, Yuri, as you mentioned, is keenly important, and it holds a lot of value to us internally, not only as just individuals, but also as a company. For example, when we talk about treasury management, it is a procedure that's put in place in order to secure the future of not only just the people that are working in the company, but also the company itself for the long term. As mentioned previously, it's a means of securing the balance sheet against anything that might come in the future and planning for that. So one of the key ways that we do that ourselves with Moontower as well as with our other projects is to be able to take in any revenues and keep half in Bitcoin and keep the other half in fiat currencies. This gives us enough of a reserve on both sides to be able to operate within the current economic system without having to go through too much trouble in terms of exchange, but also aligns us with the long-term vision that we believe for Bitcoin, in which case it becoming the world reserve currency. And also, of course, increasing in valuation substantially, which helps the bottom line, no doubt. To finish off, one of the other interesting metrics that we see supporting institutional interest, whether it be indirect or direct into Bitcoin, is actually how much Bitcoin is currently being bought and sold versus how much Bitcoin is sitting stagnant on wallets. There's a metric, and it was previously mentioned before, but we'll go through it quickly again, and that's called Bitcoin days destroyed. What that is a measurement of how long Bitcoins have sat in a particular address without moving. The theory is that the longer a Bitcoin sits in a particular address, the more likely those individuals are who own the address to hold the Bitcoin for long periods of time. Of course, some of those Bitcoins will forever be lost as users forgot their keys and were irresponsible again with the aspect of custody and the power that has bestowed upon them. But the majority of those are actually active addresses. And what we have actually seen through some of the blockchain analysis that's been done is over 40% currently of the total Bitcoin supply, which I believe there's just over 18 million Bitcoin currently mined. 40% of that has not left the wallet in 2 years or more. So this is very much a sign of individuals believing in the long-term vision and understanding what Bitcoin holds as a sovereign currency, as well as a protection against the current economic conditions and a store of wealth. So with that, we hope that you are able to take part in this amazing experience that Bitcoin is, take on the responsibility for yourself, and see what the future holds. Thank you very much for listening to us today. My name is Nick, signing off.
And I'm Yuri. Don't forget to check out moontower.co. Thank you for joining.